game-changing story to tell, is consensus-driven money, but you're using the cloud. It's important in financial services and important in money and money transfer.
Can you tell us a little bit more about this R3 initiative and how is it a good thing?
Yes, this is big news recently, the R3 initiative. It's quite new, so a lot of the objectives are still not known, I don't even think by the participants yet. But it has increased from 9 to 15 to 22 banks. And the interesting thing about it is it's not clear also where the cost savings are going to be coming from. They tout cost savings, which I think at this point are still largely theoretical. It is clear, however, that they will get cost savings, though, from participating in the trial, because you can spread the costs over 9 banks, 15 banks, 22 banks. That's a lot better than doing it yourself. Now, my question for them, though, is that if a consortium is the best approach to this, why not just leverage the existing consortium that we have today with SWIFT, the largest banking membership consortium in the world? They would be very effective at standards. I think the second thing that the R3 participants need to answer is how will this in the end not replicate a cartel which today has the potential to block participants from the international money networks. And an example of that is when SWIFT decides to use the payments network as a political weapon. We've seen this happen in the case of Iran, where they were blocked from SWIFT. We've seen it threatened with countries such as Russia and with Israel even. So I think that that's what they have to answer for in the end. If it only serves to replicate the existing cartel, then what have they really achieved?
Well, does blockchain really need a digital currency like Bitcoin?
Capital B, Bitcoin blockchain does need a native token because it has the unparalleled security, the unparalleled global access that you get from that. When banks attempt to create a private blockchain and take something off the shelf like it's a product rather than a byproduct of a Bitcoin native token, then in effect they're really creating their own altcoins. I think it's noble experiment, it's noble participation. The experience that they get from working with blockchains will be invaluable, and it could be a potential on-ramp to a public blockchain. But I think what they need to realize is that at the end of the day, they may just be creating their own altcoins and ultimately see the value of being on the larger capital B blockchain for the world's most secure network that has the greatest network effect today.
Okay. What about regulation then? It's a big issue. Do you foresee a way in which Bitcoin can be regulated?
Bitcoin regulation is interesting because it really falls into the area of national jurisdictions regulating their own currencies and regulating their own currencies in terms of how their citizens and companies can buy and sell digital currencies such as Bitcoin. So they're not, in essence, regulating Bitcoin. They're regulating the exchange of their own fiat national currencies into and out of Bitcoin. What we're seeing around the world is jurisdictions starting to regulate these exchange endpoints in a way that is similar to the regulation of financial institutions. So they have to comply with all of the AML, anti-money laundering laws. They also have to adhere to all of the KYC, know your customer guidelines. So there's going to be strict regulation of exchanges. However, with Bitcoin, the part that is unable to be regulated is the part where the peer-to-peer transactions occur. And those are the transactions that occur from person to person, mobile wallet to mobile wallet. So they don't go through a trusted third party. They don't go through an intermediary. And in essence, they can't be stopped because they're just transferring Bitcoin. These can be cross-border transactions. They can happen in any amount at any time of day. So that part of the Bitcoin ecosystem will not be able to be regulated, but we will see the thrust of regulation aimed at the exchange endpoints.
How do you envision it can do for the next half decade?
Well, Bitcoin price appreciation and Bitcoin price volatility is a little difficult to predict for people. But what I can say, though, is that the Bitcoin price chart looks very much like the price chart for silver over the last 4 or 5 years of Bitcoin price. And we don't stop referring to silver, and we don't stop referring to gold as real money. And likewise, we shouldn't stop referring to Bitcoin as real money. I think as we see more market depth, more exchange maturity around the world, we will start to see less Bitcoin volatility, and we will start to see, we will eventually see the price appreciation for Bitcoin as more of the infrastructure is built out, because at the end of the day, there's only 21 million Bitcoin that will ever be produced, and we have a moment of Bitcoin halving coming up, which refers to, in 2016, the reward will be halved from 25 Bitcoin to 12.5 Bitcoin for securing and mining a block, the next block for Bitcoin transactions.
Lastly, Jon, can you tell me a little bit about this XBT currency code?
Yes, I'm glad you asked that. XBT is the 3-digit currency code that has been temporarily assigned for Bitcoin within the ISO 4217 structure. So that is a non-political, independent standards organization that manages these currency codes. So you have GBP, you have CHF, you have USD. Well, now you will have XBT. And X is reserved for the countries, or for the currencies that are not issued by a government. And we also have XAU for gold, we have XAG for silver. When we finally see XBT receiving approval by the ISO, I think that will be a tremendous buy signal for Bitcoin, because it'll start to be listed in all of the ISO data tables that the software around the world relies upon.
Excellent. Jon, thanks so much for joining us today.
Thank you.
And thank you for watching. Click back to Dukoscopy TV for more updates and exclusive interviews. We'll see you next time.